And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Massar and Tim Stenovec as we welcome our audiences across all of our Bloomberg platforms. That includes television, radio, and our partnership with YouTube here on a day where we're seeing most stocks here on the back foot, though some resiliency when it comes to retailers.
Yeah, absolutely, right? We've been certainly focusing on, and actually there are going to be a bunch of my gainers, and we'll get to them in just a moment. We've been thinking, though, I'm sure you guys too, just looking at NVIDIA shares down about 3.6%. Again, a story, a Bloomberg exclusive about U.S. reining in AI chip sales to the Middle East by NVIDIA and AMD. AMD actually higher, but NVIDIA, it's just a reminder that geopolitics, again, can get in the way of companies who are trying to do business.
So you're watching the hardware companies. I'm watching the software companies in the S&P 500, and they are just getting crushed today after kind of in sympathy with Salesforce because of the company projecting the lowest quarterly sales growth in history. A little preview of one of my decliners, but that affecting, Alex, other members of the software industry.
Oh, deep tease, deep tease. I just want to point out, too, though, that I know we can point to Salesforce and we can point to NVIDIA and tech trading heavy, but the whole commodity complex was also taken down as well. As I wonder if we're just in a more of a broader risk-off move today, particularly if you look at that bid in the bond market.
You are seeing a bid, though, come into cryptocurrencies here on this day. The VIX slightly lower on the day, back down around that 14 level here. And then when we talk about the cross-asset space here, yields, maybe that's providing a little bit of tailwind for some stocks here, but we're still going to get some red across the screen for all of the major indices, sans some of the small cap and mid cap names. The Dow Jones Industrial Average lower by more than 300 points on the day, roughly about a drop of 0.9%. The S&P down about 30 points or so, down about 0.6%, while the Nasdaq Composite as well as the Nasdaq 100 each down by about 1.1% here on the day. But if you are looking for green on your screen, you will find it in that small cap, mid cap, and cyclical space. Dow Transport's up 1.3%, S&P 400 mid caps up 1%, and the Russell 2000 up 20 points or 1% on the day.
Yeah, interesting, too, to see the Russell 2000 small caps actually outperforming the other major indices, if you will, up about 1%. Having said that, though, Alex, if you go to the S&P 500, you've got most names in the index actually showing that they are higher for the day, 362 to the upside, 140 to the downside, 1 unchanged.
Yeah, taking a look at IMAP here, super interesting what we're looking at. We're looking at communication services and information technology. Both of those are the two sectors in the red, particularly tech off over 2%. But that's really the Mag 7 and a Salesforce effect. On the upside, you have real estate. Okay, as yields come down, you're going to have real estate do well, and utility is the same deal. But then materials, industrials, and financials also doing relatively well, which is impressive considering that overall commodity sector is selling off.
All right, guys, let's get to some of the individual gainers, if I may. HPQ, Hewlett-Packard, HP, up about 17% in today's session. It's your number one gainer in the S&P 500 today, moving the most intraday ever, highest level in about 2 years after net 2Q revenue from the company beat the average analyst estimate. This resulted in a bunch of analysts on the street, Citi and Morgan, sparking price target hikes by them, and they pointed to HP's robust PC segment. So essentially, they just raised their price target on the company. Hey, Best Buy, Romaine, you mentioned the retailers, some outperformance there. Best Buy up about 13% in today's session. The company's CEO saying during the retailer's earnings call that same-store sales for May expected to be better than its guidance for the fiscal second quarter. And then for the first quarter, it reported better than expected profitability, even as sales woes deepened and consumers remained on the sidelines with some of their electronic purchases. But nonetheless, upbeat outlook, and Best Buy up about 13%. Your number two gainer in the S&P 500. Foot Locker, another retailer, up about...
When was the last time that happened?
Which part?
The number two gainer in the S&P.
I know. It's like unusual names. As you said, retail really dominating. Foot Locker, again, 15% to the upside, up 31% at its highs today. This, as the company reported first quarter adjusted earnings per share, beat the average analyst estimate. Comp sales seen as better than investors feared. And I got to do one more. Birkenstock up almost 12% in today's session. Its full year revenue forecast topping expectations. So, yeah.
Do you wear Birkenstocks? Because Carol has very fancy shoes, so this is a good indicator for me.
I do not.
I knew it. I knew she didn't. Okay, this means something to me. Anyway.
I love you.
All right, hard pivot from Birkenstock to the cloud. Let's talk about Salesforce, because this was the big one to watch.
A lot of people at Salesforce wear Birkenstocks.
Maybe. Let's talk a little bit about.
What does that even mean?
I don't know.
All right.
Tech people.
Down 20% today. No laughing matter, as it slid by the most in close to 2 decades. You got to go all the way back to July of 2004 to find a day where we saw Salesforce fall this much in a single day. It projected the slowest quarterly sales growth in its history. It renewed concerns that the company will be left behind in the AI boom. We spoke to Bloomberg Intelligence's Anurag Rana a little earlier in our program about this decline. And what he basically said is that you have a lot of companies shifting their budgets, shifting their tech budgets. Instead of buying software and services right now, they're taking that money and they're buying chips and servers. So think NVIDIA and Dell being the beneficiaries rather than Salesforce and perhaps a company like ServiceNow, which brings me to my next decliner. ServiceNow falling in sympathy with what happened with Salesforce today. Shares of ServiceNow falling by 12%. This after Salesforce gave that weak outlook, and we saw the entire sector just move lower. Also, Kohl's down 23%. The company had its worst day in its history as a publicly traded company. You got to go back to 1992 when that company went public. This after it slashed its guidance for the full year. It reported first quarter results that missed on pretty much every metric. Comp sales for the quarter fell 4.4%. It was the 9th consecutive decline. Analysts had expected only a 1.7% drop. Kohl's offered deep discounts in the period. The company did say, though, that sales of clearance items actually declined, leading to a miss on those comp sales.
Well, where you're seeing the safety big guys today is definitely within the bond market. Not the dollar, but the bond market. You have yields moving lower pretty much across the curve. A nice bid into the belly in particular. Yes, you had that second read first quarter GDP. Man, that's hard. That came in a little lighter. You also have personal consumption a little lighter than expected, but still pretty solid growth. And guys, this is all, of course, ahead of that PCE data tomorrow that I really hope will finally be a catalyst or at least directional for this market.
Yeah, maybe give us a little bit more insights here into what's going on with the Fed. Meanwhile, we continue to get earnings, awaiting quite a few crossing the wire. NetApp already out. Those shares up 3%, and now we're getting Dell crossing the wire right now. And, well, the numbers, they look good. The company, I'm going to start here with the forecast going forward. The company is saying that for the first quarter, this is for the first quarter, the numbers just passed. Net revenue coming in at $9.23 billion. The street was looking for roughly about $9.06 billion. Adjusted EPS also slightly beating at 1.27. The street was looking for $1.23 here. Total net revenue coming in $22.24 billion. The street was looking for 21.6 here. So overall, it looks like a beat on all the key metrics here. But as you can see, the share reaction to the downside down 10%.
Yeah, that's pretty significant. Keep in mind that this one has been on such a tremendous run up, 123% year to date. So it does look like there's some disappointment. The Infrastructure Solutions Group, $9.23 billion. You mentioned that. That's up 22% year over year, beating the estimate. Servers, obviously a big thing. We've heard a lot of conversations, if you will, from Dell about the build of AI, the build out, and how companies are doing it, not up in the cloud, but they're going to want to be doing it on premise, is what they call it. Servers and networking, $5.47 billion, folks. That's a beat. Storage revenue, that's a little light, $376 billion versus the estimate of $3.98 billion. And adjusted EPS, $1.27 versus $1.31 year over year. The estimate was $1.123. So beat, but down from the year before. Stock down 9%. So we're going to have to dig through a little bit to get some of the commentary to find out why there's some disappointment here.
Look, total net revenue also coming in above estimates at $22.24 billion, beating estimates of $21.62. The Client Solutions Group came in above estimates at $11.97 billion. Commercial revenue at $10.15 above estimates. Consumer revenue did come in a little light, but that's a small portion of the company's revenue these days at $1.81 billion versus estimates of $2.06 billion. Alix.
Yeah, just looking at some of the commentary, you had the chief financial officer in the press release talking about how they're really well positioned to take on AI growth. Saying that revenue is up 6% in the servers and networking revenue up 42%. They have strong cash flow. They can execute. So clearly, there must be a large expectation game here playing into that decline from Dell down about 9%. But again, as Carol mentioned, it had just skyrocketed after last quarter as everyone kind of remembered that they were an AI play.
Yeah, and there was some easing of some of the GPUs coming from NVIDIA in terms of the AI build-out. So it looks like they are being able to sell servers. Real quickly, Nord Nordstrom, folks, if I just want to bring it up, they are first quarter total revenue. It's a slight beat. First quarter adjusted loss per share, 24 cents versus an estimated loss of 7.2 cents. Just a quick check on the stock, and it's down about 2.7% in the aftermarket. A lot of this one is shorted, so we'll continue to track that. All right, guys, that is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. We will see you again, same time, same place, tomorrow.